Subject principles of accounting. We would be going with chapter number 1, Introduction to Accounting. This is going to be the content, like the basic concepts, definition, need, importance, limitations, objectives, functions. What are the branches of accounting? Its scope covered. Everything will be covered up in this unit, which as discussed, will be covering into 2 sessions, today and tomorrow. Why accounting? So what exactly is accounting and why accounting is required? If we are transacting something, if we are having any transactions with the other party, we need to record this because ultimately we would like to know what are the payouts from our pockets, what we have received at the end of certain period. So accounting is something wherever we are going to record the transactions, we are going to classify, verify, then record and summarize all the business transactions. So it's going to be, first of all, classification, verification, recording, reporting of all such kind of business transactions, which ultimately are having a certain, we can say, certain relation with the assets, liabilities, income, and expenditure. Now, what is asset, liability, income, expenditure? I'll explain that now. So assets are the one which you belong, which you own. Assume yourself as a businessman, businesswoman, and for your business, there could be certain assets required. Maybe for your business, you would require machinery, you would require furniture, you would require computers, you would require car or any other premise, building, land. So these all things are very much necessary for your business. Those become your assets. Your own belongings, your ownership would remain on those kind of all properties. So these are all called as your assets. Now these assets are bifurcated into two types majorly. One is the tangible and another one is intangible. Tangible assets are those which we can see, feel, touch, like car, computer, furniture, machinery, building, which we can see, feel, touch. Some are considered to be the intangible ones, like the goodwill, patents, trademark, service mark. So those are all considered as the intellectual property rights. Then geographical indication considered to be intellectual property. Now what's geographical indication? Darjeeling tea is very famous. So Darjeeling tea, Assam tea has got geographical indication. Then certain products like strawberries from Mahabaleshwar, then the also oranges from Nagpur, and then Alfonso mangoes from Ratnagiri. Then certain other international level examples, if I would need to give them, Scotch is there from Scotland. The certain perfumes are there from Paris. So these are all having geographical indications. Certain regional importance has been given to the same. So those all geographical indications, patents, that means your invention, innovation into particular thing. Trademark is the symbolic significance to any particular business. Goodwill is how you serve your business ethically, would accordingly increasing your we can say goodwill. So the ethical business, the sustainable business, the we can say transparency, credibility, creditworthiness of the business would be having certain value in the market. That is called as goodwill. Now, liabilities are those which you are supposed to pay. Like you are supposed to pay back bank loan, you are supposed to pay to the suppliers from whom you have taken the raw material, and thus that it becomes your liability, that becomes your responsibility, that you should pay to someone, maybe the artificial person like bank, or maybe a living being like a supplier. So that becomes your liability. The next is income. Whatever you earn will be considered as your income. Maybe you are doing certain business of manufacturing. So when you manufacture, while manufacturing, you are doing all such kind of expenditures. So for purchasing raw material, for paying salaries to your employees, for packing material, for packaging and labeling and transportation, you are doing all the expenditures. But when it is a time to sell those goods, you are going to get income finally for the business. So those all incomes which we consider after making all those expenditures. So here income and expenditure is very well clear. Now accounting is we are going to classify these all different types into assets, liabilities, income, expenditures. We are going to record those. Now, before we go ahead with accounting, just would like to share that there are 6 M. M, that is a capital M's. So there are 6 M's which are required for the business. The very first is money. Money starts with, no, where a business, we can say business starts with money. It is work. Business is running for earning money. And finally, money is the outcome of business activities. So it starts with money, it runs with money, it ends with money. So money is required every time in a business. In accounting language, we call it as capital. The initial capital introduced, initial money introduced in the business is called as capital. The second required M is the material. That means raw material. Goods which are considered, goods is the specific accounting terminology which we consider for recording. So goods are those movable goods which we are supposed to move from one place to another, which is going to through certain process. So raw material is considered as goods. When raw material we are going to purchase from supplier, we would be taking it through the production process, and afterwards we are going to sell those as the finished product. So this second M is required for the business is M, material. The third M which we considered is the manpower. Manpower, that means labor, human resource, and manpower can be of a different types, maybe skilled, unskilled, educated, non-educated. So literate, illiterate, skilled, unskilled. Then they are experienced or fresher. They are on a permanent nature, permanent employees, or some can be on temporary, some can be on contract basis. So likewise, there are different categories of labor. Some laborers are working in the factory. Some workers some employees are considered in the offices. So factory workers, office employees. These are the terminologies which we consider. In factory, those are the workers. In office, those are the employees. So human resource or manpower is again a third important M. The fourth M is considered as the machinery. To run the business, we require machinery as our important asset. So this machinery is required for both things, that is to keep the material into process and to utilize manpower very well. So manpower and material are properly being synced with the help of machinery. The fourth aspect is over, that is machinery. Fifth is now the method. What's the method of your business? Methodology, we can consider. A methodology, that means how you are going to carry out all the activities. So every business will adopt different method of production, different method of selling, distribution, advertising, everything. So what's the method of any particular business would be considered depending upon the demand and supply for the product. Assume few things that certain businesses are not taking a very fast grip during Diwali period, during festives. So during festivals, these certain companies are having very high demand. Like the electronic items, take examples of mobile handsets or maybe electronic items like the fridge, refrigerator, car, or any televisions, AC, or any other product we would say electronic item into, or maybe car, or maybe mobile handset, computer, laptop, etc. They will be largely demanded during Diwali festivals. Reason being, people are thinking Diwali is auspicious to purchase, and thus we need to as a business we need to have a grip on the production processes during this time period. So the machineries, material, and manpower would be required at the max. With that, certain methodology will also be there to have a faster pace to achieve the profitability during this period. For a business, there are going to be certain off periods, there are going to be certain peak seasons, there are going to be certain period when there is a boom in the business, there are going to be a good business trade cycle during that period of time. And that's why business needs to keep all those recordings very clear so that it can procure to the need of all those requirements, all those added demands. Now, this is the fifth M which I considered. The sixth M is the market. Which market is suitable for the business? Local level, the state level, national level, international level. How one business is going to explore this market. And to control these all six M's, there is going to be a management. So management is taking care of all those aspects of 6M. I'll repeat the 6M again. One is very important, money. Second is the material. Third I considered is the manpower. Fourth I considered is machinery. Fifth I considered is the method. Sixth is the market. And to control all the six, we have got the management, again the 7M. So these are all aspects important which are linked directly to the accounting. Now, definition of accounting, not expected to have by heart. It's just simply for the purpose of understanding. So here it's going to be of a financial character. It's going to be of a monetary transactions. We are going to interpret those transactions, put it into the language of accounting, and we are going to record those all transactions. Why is there a need of accounting? There is a need of accounting because a business is accountable to so many of these stakeholders. Here I mean, when I say stakeholder, there are so many things involved. One stakeholder important is the investor in the business. Those who are going to invest in the business would like to know what is the profitability of the business. What is going to be the return on my investment? And that's why the investor is very keen to know about the profitability of the company. Now, how is the company going to know about profitability? When it's going to record all the transactions. And how this recording of a transaction is done? With the help of the accounting concepts, accounting systems. So take any sector, every business is running for earning profits. Profitability can be achieved only when we are going to properly record, properly analyze the expenditures and income levels. The second important in the investors category, we have got different investors. In the upcoming slides, you probably would come to know about so many of the stakeholders. So here, accounting requirement is the division of labor, specializations, how the business is developing, what kind of different expansion plans or diversification plans a company can take in future, the budgets for the next period, or any business strategies required would be considered through accounting. Mistakes and error can be rectified when we record the transactions. And taking the future decision becomes easy. This is it what I was talking about. The stakeholders. Investors are the one important stakeholder who would like to know the profitability of the company because they intend to invest in the business based on the profits. Second is the employees. Employee are the one who would like to know whether the company is running into profits, whether it is earning good amount of profit, can it increase our salary, can the company give promotion to us, can it add incentive to our salary. So this remuneration, promotions, any retirement plans, then any hikes in the salaries, these all things can be considered linked by the employees. Lenders, that means the bankers are there. So bank have lent certain money to the business. So bank would like to know the profitability of the organization or the business. That if the business is earning profit, it can pay back our loan on time. Otherwise, there is going to be a certain problem. So even the banks would be interested to know about the profitability. Suppliers, because those are the suppliers who have given material on credit basis, Would like to know again profitability, that whether the company has earned enough profits to pay back our loan, whether the company is really doing good with its production and selling process. Customers are very keen to know, because customers, and when there is a B2B sell, B2B, that means one business is selling goods to another business, then that another business is dependent again on the first business for getting certain materials. The second business from B2B, the second business is again doing certain process on the product and then going to sell to the customers. So for those customers of second business, this business is accountable to customer and the first business is accountable to the second business holder. So in B2B sales, the second business considered as the customer of first business. So it's B2B, first business accountable to second business, but the second business per month is already a customer for the first one. So the stability and profitability is considered by the customers, because customer would like to know the sustainability, the continuity of operations of the business, so that it can enter into certain long-term obligations. Next is government and certain other agencies like RBI, Stock Exchange, SEBI. These are the organizations which are considering. So government is keen to know about the profitability because government want taxes. So there are RBI, SEBI, Stock Exchange, government, maybe certain other organizations which are governing the businesses. Those can be considered for the tax payments. The next I would go. Limitations of accounting. So there are certain limitations, though there are many of the benefits to the accounting. There are certain limitations, drawbacks also. What all those drawbacks are there? Accounting is considered only for the previous past happened transactions. We are not going to record the future transactions. After 2 years, I am going to pay to someone, to Mr. X, rupees 50,000. After 2 years, what I am going to do? I am not going to record in the books of accounting. Even though that becomes my liability, I'm not going to record that as of now. But if I have given certain amount of 50,000 to Mr. X yesterday, I'm going to record in my transaction yesterday only that yes, I have paid this amount to Mr. X, rupees 50,000. So the accounting is considering all the monetary transactions only. They are all going to consider only the past performances. No certain futuristic approach would be given to accounting. Based on the past figures, we are going to estimate future. But the future transactions are not going to be considered, not going to be recorded, not going to be taken on record in the business. Next is, if the prices change, accordingly, every day we are not going to make new changes. So the accounting is going to be a little constant and rigid in that manner. Then there are several accounting treatments which are considered. So the accountant is not going to. So the accountant is again not going to not going to record the transactions, or he'll be recording transactions as per his accounting knowledge, as per his accounting, we can say the conventionally which he has been followed in a treatment. So a treatment of accounting will be dependent upon how well is your accountant. There are 3-4 methods by which accounting could be done. If 1 or 2 methods are followed, the other 2 methods are not followed, these kind of deviations would be possible. Then there is no real test of managerial performance. What is the best accounting? That is nowhere considered. Whether you are doing is perfect or not, nobody is really concerned. Nobody is really know that okay, this method I'm following is the best method, is the method which is going to cater to the needs of everyone. There is no as such performance linked with the accounting. It's just as soon as the transaction is over, you are going to record that. Whether that recording of transaction is further going to have any impact is not considered in the accounting. Only monetary transactions are considered. Say, for example, a person is having very good leadership skills. A person is having very effective communication. A person is very hard worker. He is working hard. He is achieving good targets. These are all the fabulous skills a person is holding. But that doesn't have any place in accounting because those are all the qualitative aspects. A good communication skill, effective communication, very strong leadership qualities, a very hard worker personality, a very no a gel person. So those are all the way good qualities, but those are not having any place in accounting because that is not monetized. Till the time we monetize any transaction, we are not going to consider accounting. When we start paying for that employee for his hard work, for his effective communication, for his leadership, if we start paying him additional amount of 5,000 rupees every month, then we are going to mention in the accounting that the person is paid rupees 60,000 a year for his additional qualities. Then and then only we are going to consider in the accounting. The next I would go objectives and functions of accounting. The recording of transaction, classifying, summarizing, analyzing these transactions, and then interpreting and communicate in the proper form. These are all the different objectives and these requirements of accounting. So here, the accounting is first of all being recorded. Everywhere you would find accounting is there. You don't recognize this as an accounting, but yes, you are also doing accounting on regular basis. Let's take example how you are also involved into accounting. Now, daily basis, you do certain kind of shoppings, whatever the shopping, a small shopping maybe of certain grocery items or any kind of, eatables or any kind of, any other shopping, big shopping of your shoes and garments and books and stationeries and etc. You are going to do with the scan code, you scan and you make payment with GPay, PhonePe, Paytm or anything, UPI apps. So whenever through UPI apps, you are going to do any transaction, do you get a transaction history in your mobile phones? When you open PhonePe, at the bottom right column, you will find history there. So those is the history, or there are the transactions which are considered, where you will get the list of all the payments, all the payments which you have made, how many payments, whom to made, when to made, how much of the amount. So that's complete record of your transactions is there. So there is complete record at how much you have received, how much you have paid to someone else. So indirectly, you are maintaining nothing but a particular transaction record. So you are recording the transaction. With this record, you are classifying that much, how much you have paid and how much you might have received. So you are going to summarize. How you are going to summarize that in a week, I have spent such amount. In a month, I have spent this much of amount through PhonePe. So this much I have paid in a quarter. Likewise, you can summarize on a weekly basis, on a monthly basis, on a quarterly basis. With that, we can extend it to the years also. So you are going to summarize those all transactions. Accordingly, you are going to analyze. Analyze, that means in which month you had the maximum payments done, in which month you spent more, in which month you have got less income. So these all things you are going to consider. With these interpretations and communication, you can come up with certain right decision. Now you have to cut down on your expenditures because you are doing much of expenditures through these UPI apps. So you have to cut down on your cost. That's something, whatever the logics which you can apply there afterwards. These are the branches of accounting. Branches of accounting, in which main branch I will just go on with discussing. HR accounting. It's so it's HR accounting is human resource accounting. Whenever there are going to be hiring in the company, the people are getting hired in the company, they will be properly trained and developed properly towards certain tasks, and then they are getting placed in the company for the right position. They will be paying certain CTC or package. CTC is called as cost to company. So what's going to be the cost to company? That means a package given, maybe a 6 lakh of package per month, 50,000. So 6 lakh of package would be going to be there as the payout from the company. Now, HR accounting will be concerned with how much of monies a company might have earned from the employee. If the company is ready to pay him 6 lakhs rupees, that means the company should receive in return certain good amount of returns from the employees. If employee is not worth giving 6 lakh rupees because he is not doing any productive task in the company, then his payout should be less. Those employees which are earning more, which are not getting more revenue for the company, will be then getting paid higher amount. Thus, the marketing guys usually will be having commission-based or incentive-based salaries because they are going to achieve targets, because they are going to generate more and more revenue. They will be getting more and more of the commission. That all calculations could be considered into HR accounting. Financial accounting is one when the financial reportings are considered to the government, to the income tax department, to the RBI, to SEBI, to any other local bodies maybe, or to the investors as a whole, to the stakeholder as a whole. So financial accounting is starting with the journal entry, then comes to ledger posting, then comes to trial balance. After it will be a profit and loss account, then the balance sheet, cash flow statement, fund flow statement. These are the 7 important stages which you are going to consider. Then, cost accounting is you are supposed to minimize the cost because you would like to increase on the profitability. So that will be considered. Management accounting is whenever a management or the board of directors would like to take important decisions about the businesses, they first of all need certain ground data, as if what was the performance of the company during last 3 years, what was the profitability of the company, can company go for certain corporate restructuring, like can the company go for a joint venture, can the company go for taking over certain another company, can the company get merged with any other company, can the company go for business expansion to now international level, going with the cross-border transactions? Can a company do certain kind of product diversification? Can a company add a certain more products to the product line to the existing products? Can company go with the integrations, vertical integration or horizontal integration? Like the integration, that means one company is getting integrated, getting alliance, getting merged with certain another company, or it is taking over certain another company. With that, in the cycle, in the business process cycle, it's going to be upward revision or a downward revision of it. So, example is if manufacturer is there, which has got the backward integration, that means manufacturer is also now going to supply the raw material. So raw material will be there for the manufacturing, and the manufacturer is also going with the forward integration. That means now the manufacturing company is again starting a packaging business. That means manufacturer has done a backward integration, or that means it has done the raw material supplying also. So it has entered into raw material supplier business. Plus it is manufacturing with the business, and it is also doing with the packaging of it. So this can be the integration. Now, these all data would be required for management accounting. Tax accounting is considered with for calculating the tax liabilities. How the tax liabilities would be considered. And the last is social responsibility accounting. That means wherever the companies are earning certain profits, it is supposed to utilize certain amount for the social upliftment. Those social responsibilities are there for the organization because a business is using all the social resources like the land, water, electricity, air, and everything is required by the businesses, and a business is polluting the environment a lot through the air pollution, noise pollution, water pollution, soil pollution. It is creating a lot many hazards to the society through the business processes. And for that purpose, a business is supposed to also take care of all the social aspects. So it should clean the dams, it should clean the rivers, it should clean roads, it should pay attention to certain weaker sections, those who are deprived of their certain rights. Maybe health, education, sanitation, these all things are considered. So there are a lot many of the big companies have set up certain foundations. Like example, Infosys Limited has got Infosys Foundation run by Honorable Sudhamurthy. Then Reliance Industries Limited has got Reliance Foundation run by Mrs. Nita Ambani. So these are the examples which the Reliance Foundation is getting revenue from Reliance Industries Limited, and Reliance Foundation is doing these all sanitation, health, education systems for the deprived people. They are doing this philanthropic and this charitable or this or social activities. Similarly, Infosys Limited is spending money on CSR, that is corporate social responsibility, through Infosys Foundation. Likewise are the details. Now, the next is the scope of accounting. How is the scope that because of the accounting, we would come to know how many transactions we have done. We can estimate the future. We can predict what is going to happen in future. It is going to help the decision-making process, and performance evaluation will be done in relation to the targets. Are we going to achieve the target? There are certain set targets for the businesses. With the accounting, we would come to know whether we have achieved the target, we are far below the target levels, or we are far ahead than the target levels. Where are we landing? Where are we landing now? That we can come to know with the help of accounting records. Then the controlling operational weaknesses. That means we are going to come to know as to where we are making unnecessarily expenditures. Those expenditures can be cut down. Here, stewardship, that means preserving the economic interest of the stockholders. So those are the investors. They are relying upon company, and company relies upon those investors. If investors won't be there to invest in the business, a business will find a financial problem. Because of the financial problem, maybe the production process may not go very well. If the production process do not go well, the selling would be in the problem. If sales would be in a problem, the profits will be in a problem. If profits are going to be in a problem, the investors will be getting less returns on their investments. So it's considered as a vicious circle, and that's why the economic interest of the stockholders should always be preserved. A business is running all the way to please and to make happy the stockholders or the investors, because they are actually putting their monies in the business, because of which business is running. So they should pay back well to the investors, that too on time. Necessary information through the regulatory authorities are required. Those things all can be considered by the account.